A Canadian mining company just got named in a White House domestic supply document. That same week, a major Wall Street bank cut its price target on one of Canada's largest copper producers. Both things happened inside 96 hours. That collision is not a coincidence. It is the fault line running through every critical minerals portfolio right now. The trade war was supposed to punish foreign suppliers. Tariffs on copper imports were framed as a tool to bring supply chains home. But the administration's own document lists Highland Copper, a Canadian junior, alongside Rio Tinto as part of the domestic copper strategy. Highland's Copperwood project is in Michigan, which makes it American soil production, even if the parent company trades in Toronto. The geography of the ore body matters more than the flag on the stock certificate. That distinction is load-bearing. It means the trade war is not simply a Canada versus U.S. story. It is a jurisdiction of production story. And that reframes how capital should be moving through this sector. Three things happened in the same week that all converge on the same question. Who controls copper supply when the political ground is shifting? First, Quantum's Cobre Panama stockpile is moving. Panama authorized the removal of roughly 70,000 tons of copper from a mine that was shut down under public and political pressure in 2023. Before closure, Cobre Panama produced 350,000 tons annually. That is approximately 1% of global copper supply, pulled offline by a single court ruling. The 70,000-ton release is a partial unlock, not a restart. Processing begins 3 months after approval and runs for about a year. The mine's long-term fate remains undecided until at least June. Meanwhile, Eldorado Gold closed its $3.8 billion acquisition of copper-focused 4N mining, with 85% shareholder approval, despite Glass Lewis recommending a no vote, and despite L1 Capital calling it one of the most value-destructive deals in decades. 85% is not a squeaker. That is a mandate. Shareholders looked at the activist argument and voted for copper exposure anyway. Then Vizsla Copper published drill results extending the Poplar Porphyry system 200 meters northward in British Columbia, adding to a resource base already sitting at 152 million indicated tons. That is exploration stage news. But in this environment, it signals where development stage capital is flowing, toward defined resources in stable jurisdictions with port access. Frontier Lithium raised $15 million in a bought deal to advance its POC lithium project. Bought deals price at a discount but close fast. Underwriters are taking the inventory risk. The fact that BMO Capital Markets stepped in at that size suggests institutional conviction on lithium permitting timelines, not just the commodity price. The consensus read on this week's news is straightforward. Trade war creates domestic supply urgency. Copper prices rise. Miners with North American assets benefit. That read is not wrong. It is just incomplete in a way that matters. Here is what that framing misses. The White House naming Highland Copper is not primarily a commodity price signal. It is a financing signal. The U.S. Export-Import Bank's $250 million letter of interest covers a substantial share of the Copperwood project's $391 million estimated capital cost. That is, federal credit support flowing to a development stage project that would otherwise compete in a private capital market that has historically underfunded North American copper development. The strategic designation changes the cost of capital, not just the optics. That mechanism, government credit supporting development stage critical minerals projects, is the variable that most commodity analysis ignores. Spot copper prices get the headline. But a junior miner in Michigan with XIM Bank backing operates in a fundamentally different financing environment than one without it. The project economics shift before the first ton is sold. The same logic applies in reverse to First Quantum. 3 Wall Street analysts moved their targets in opposite directions within 48 hours. Morgan Stanley cut to $37.70. UBS upgraded to a buy with a $50 target. Stifel raised to $47. The stock was trading at $37.53. That divergence, nearly $13 between the lowest and highest targets, reflects genuine disagreement about whether the Panama government's June deadline produces a workable long-term framework or another political reversal. First Quantum's beta of 1.50 quantifies what that uncertainty costs in volatility terms. The scenario that resolves in favor of the copper trade looks like this. Panama reaches a long-term agreement on Cobre Panama before June, unlocking not just the 70,000-ton stockpile, but a credible pathway toward partial or full restart. That would add meaningful supply, but the signal it sends about political risk rehabilitation in Latin America is worth more than the tons. Capital that left the region after the 2023 closure starts pricing back in. First Quantum, with a 52-week range from C$15.12 to C$45.17, has already demonstrated it can reprice dramatically on jurisdiction news. Simultaneously, the XIM Bank converts its letter of interest into a binding commitment for Copperwood. That would establish a precedent. U.S. government credit available for North American critical minerals development, not just as a political talking point, but as a funded facility. Other development stage copper projects in the U.S. and Canada would immediately reprice against that template. The scenario that pressures the trade: copper and gold have already dropped more than 10% from their January all-time highs. If the tariff environment tips into demand destruction, slower industrial production, deferred electrification spend, the supply-side urgency narrative loses its anchor. Development stage projects get re-rated as optionality, not near-term cash flow. The activist case against the Eldorado Foran deal, which was dismissed at 85% approval, would start looking prescient in hindsight. The evidence leans toward the constructive path, but only if the Panama June deadline produces a durable framework, and only if XIM Bank moves from letter of interest to binding commitment. Both are conditional. Neither is guaranteed by this week's news alone. One line to hold: the trade war did not create the copper supply gap. It just put a government balance sheet behind closing it.